Adam Johnson with me to cover the markets for us.
Yes, sir.
Is the Gaza deal a factor at all in this market?
No, it's not. What's happening in Gaza this is a glorious moment for not only Gaza, but for the world. Peace in the Middle East, potentially the release of the hostages. It's a humanitarian story. It's a diplomatic story, arguably a diplomatic triumph for those involved. But it's not a market story, Stuart.
Okay. How long does the shutdown have to go on for before there's a negative market reaction?
It could go on for quite a while. And I say that, Stuart, because there have been 21 shutdowns since 1975, and they all got resolved. And we know that. In fact, if you look at the last one, which was during the Trump administration, the transition from 2018 to 2019, it lasted 35 days. The market fell 15% before the shutdown, but the day of the shutdown was the low. And then the market took back all those 15 percentage points and within a month was making new highs. And isn't it interesting that since the shutdown, these past 8 days, the market keeps making new highs? Because markets look forward.
You could say the same thing about when the shooting began in the Mideast.
Yeah.
Market went down,
yeah,
but quickly recovered. And now it's at record levels when you got the peace deal.
Well, it sounds ironic. I actually went back and looked at 20 different events that involve violence on a grand scale over the past 30 years, from the Gulf Wars to 9/11, et cetera. And typically, what happens is that in the first 48 hours, markets fall 8 to 10%, and within 2 weeks, they're right back to where they were. So it's the shock that sends markets down. But ultimately, again, to your first question, is it a market story? No. Ultimately, that sort of thing, ironically, is not a market story.
America's top banker, that's what people call him, that would be Jamie Dimon. Yeah. He's warning of a significant correction within 6 months to 2 years.
Oh, gosh.
I mean, I'm trying to wrap my arms around that one. Of course there's going to be a correction.
Okay, I've got another prediction for you, Stuart. At some point in the next 5 years, there might be a recession.
Right, there you go.
Right? I mean, so, you know, this is what Jamie Dimon does, and God bless him. He is the top banker in this country, and he has built such a machine in J.P. Morgan. But this is what Jamie does. He always sort of puts something out there just to let you know he's paying attention. You know, there could be a recession in the next 6 months to 2 years, Stuart, and we're keeping our eyes on it. I mean,
but he did say, I'm more worried than the rest. That's what he said.
That's fair, and I suppose that...
that's just Jamie Dimon being Jamie Dimon again.
Yeah, exactly. So, I mean, look, I am fully invested, as you know. I'm very bullish on what's happening in this country right now for a number of reasons. But I also recognize it's not a straight line. And in fact, if you look at the drawdown from the January high to the April low, my portfolio, the American Ingenuity portfolio, lost 34 percentage points. But guess what? As soon as we got through tariffs, we made back those 34 percentage points in less than a month and then have gone on to new highs. So you have to, it's time in the market, it's not timing in the market.
You don't have gold in your portfolio.
I do not.
It's
no.
just not your bailiwick.
There's nothing ingenious about gold. It doesn't fit the American ingenuity paradigm of the people, companies, and technologies driving the world forward.
So you missed it. You missed
it, right? I missed gold. I missed gold. But we've got NVIDIA and a bunch of AI names. So.
That would.
Can't get
Adam Johnson, you're all right. You're with me for the hour, you lucky guy. Thanks very much.